Hey, good evening, everyone. This is Trader Tim from over at eMiniMind.com. I'm actually doing this video on Sunday night, doing a market analysis video for the 24th of September 2017 that will kick off the week. I wanted to first talk about the 2500 level and that we've only been able to close above that level once. And when we were down at 2475, that was another key level that we weren't able to close above for quite a while. We were back here at previous highs, moving sideways, and we just couldn't get that close except for on the 7th of August to actually close above 2475. And closing above a key level is really a way for that side of the market, whether it's bulls or the bears, to really uh, solidify that follow through. So we've got some sideways movement up here near 2500, but we've only had one close above 2500, and we on Friday we were not able to close above it. We were right at it, which is a good sign, but I want to see more closes above 2500 if it's going to move sideways to build that base. We've got a really good area up here, 2495 to 2500. If we do move sideways, that would solidify this as sort of the next support level to hold us up. We could go a couple of different places at this point, though. A pullback breaking down below 2495 should take us down to 2470s, this recent support. There was a lot going on last week. We had the FOMC meeting announcement. There have been a lot of announcements and economic things coming out of the White House in the U.S. So it was almost like we were in this holding pattern up until the FOMC meeting announcement, and then things kind of unfolded, and traders really didn't get um, sort of a definitive, okay, this is the next course of action. So as we head into this next week, obviously breaking the swing high, the all-time highs here, would be a good sign that we can jump on and expect some follow-through up to the daily negative 23% target. That's at 2520. Um, if we do start to drift down from here, there's really not much below us other than this 2470 support before we would come all the way back down to 2420s. I get the question a lot, how do I know when to draw an extension, which is highs to highs, versus a traditional? So when you're drawing a retracement, a low to a high, that's a traditional 50% retracement. The market pulls back to the 50, then moves up to the negative 23% target. Well, in some instances, when we go beyond the negative 23, the market will pull back only to an extension, so highs to highs. And you'll see the market pull back to that 50% level. I don't trade these too aggressively because if the market's going into extension, we're almost in this bull flag scenario, which we're kind of in right now. But it's a good way to, you know, determine, okay, the market is extended at this point. We've only pulled back to the extension. We haven't made the full retracement to the next level. Now, when we do that, when we draw that up, we see, oh, what do you know, 2476, right around this previous high level. So, a move back down to 2475, 76 area would certainly be, nothing for alarm, good healthy pullback, and the opportunity to jump back in and ride it up again. That target also lining up with the 2520 from this daily down below us. So a lot of targets above us. When we go to some of the individual stocks, the Googles, the Apples, the Amazons, they're just not doing a whole lot. And so, in a lot of ways, that's weighing on the market. Um, but there's also a lot of policy indecision that I think is weighing on traders' ability or lack thereof to act. So, as we go into this next week, we'll see how things start to unfold on Monday and Tuesday. And I'd like to see us get away from this 24.95 level because remember when we were back here at 24.70, it was just a lot of tight range bound days. And usually after the FOMC meeting announcement in September, things really do get a lot better. So I'm expecting much better trading opportunities kicking off this next week. And if we can get above 2507 or below 24.95 and get some momentum, or let you move to the downside, move towards the next daily long 2476s, then we should be able to continue in this nice progression of a couple of good trending days and then a pullback, maybe a couple of days inside that bigger body candle, and then another couple days of trending, moving up to the target. So we've been in a pretty good rhythm. It hasn't taken too many days, to go from the 50% to the target. This last one, we pulled back to the 50, and then we had 1, 2, 3 inside days, a fourth day with a gap, a fifth day on a gap, and we were already at the target. So the market is moving pretty good. I mean, we're at all-time highs. So things are looking good, even if the economic outlook and some of the policy things might make you feel a little bit uncertain, or make traders in general feel a little bit uncertain. These are definitely good times in the market and the economy. As always, we'll be doing live trading Tuesday. You can tune in, follow along as I go through the setups, talk about the markets, answer questions, and that is over at emoneymind.com/VIP. I hope you have a great week, and we'll talk to you soon.